All right. I think we're at the hour. My name's Wyatt Frazier. I run Sit Reps with Kyle, who most of you probably see his face, obviously on Instagram. Him and I are both partners on the business, and I'm normally the one that's trolling Ben Kelly on LinkedIn, which has been something that we've found is surprisingly popular amongst people. So, tonight we're going to be talking about the ways that you can make sure you are not one of the people that DMs us saying that you thought about buying Ben Kelly's course on business acquisition, because you'll have some clue about the basics of financial analysis and an understanding of why you can't buy a nail salon for 20 times revenue. So tonight we're going to be going over investment banking. This is kind of there's kind of the two-headed dragon of business school recruiting for most vets, consulting and banking. There's many other paths. I did one of those, which was going into an operating role, chief of staff role at a private equity firm, inside a portfolio company. There's tech, there's many other things, but this is a really solid decision for some of the reasons that our panelists are going to share with us tonight. And personally, I think that banking has, in terms of technical skills, is probably one of the few things you can do out of business school that actually gives you a defined skill set. That quite frankly, I envy from the people um, that are banking veterans, I guess, in a literal sense. So, um, our two panelists tonight are going to be Spencer Smith and Matt Schockman. Matt, you have MD vibes. They're calling from the car, which I love. Um, we'll let you two introduce yourselves. I won't belabor the point. Spencer, I will add, if you want a fantastic photo, him and I were Beast Squad mates back at West Point, and my favorite photos of him wearing the birth control goggles, pretending to have a gun, running around above the chapel at West Point. But I will let Matt go first, and then Spencer follow with you, and then we'll jump into some of the questions. Oh, Matt, you're muted, Matt.
$5 donation to veteran charity, your choice every time you're muted. So grew up in the suburbs of Chicago, hockey player, did that for 2 years between high school and West Point. 5.5 years active duty, 24 months Iraq and Afghanistan during the surges. Got out, went to the 2-year full-time program at Kellogg, had the entrepreneurial itch, thought about doing a search fund, had some mentors say, go prove you can translate your hockey and military skills to make somebody money. So did investment banking to hone my finance chops, did that for a couple years, then quit and started Chamberlain Advisors, human capital staffing and placement company, scaled that, spent like a little over half a decade operating partner and on the investing team at a micro cap lower middle market buy side shop, and then came back earlier this year to run Chamberlain again full time. Live in the suburbs of Chicago, married, 4 kids, girl, boy, girl, 16, 14, 12, and 9. The 16-year-old and the 14-year-old have their back to school night, which is why I'm in the car. So I can only miss half of the back to school night teacher conferences and run in there as soon as the webinar is over. So appreciate you guys putting up with the janky background.
Thanks, Matt, for kicking it off. Yeah, as Wyatt mentioned, Spencer Smith, West Point, class of 2015. Wyatt and I were B squad mates. We go way back. But yeah, I after West Point, I was a military intelligence officer for 7 years. I was at 3ID down at Fort Stewart, and then I was at the 82nd up there at Fort Bragg, North Carolina. Deployed to Iraq once for 6 months in 2020. And then after I got back from my deployment, I thought, hey, this Army thing's been really fun, but I'm kind of looking for something new challenge. So decided to, like many of you, I'm sure, applied to business school. So I attended HBS, graduated in 2024. I actually originally wanted to do consulting, and then when I got there, I met some people who'd been in banking, convinced me that banking was the better path. Wyatt kind of touched on it, like more defined skill set, a lot more rigorous, like financial analysis. It's a little bit, I feel like sometimes the knock on consulting is you're very much a generalist, and it can be a little bit nebulous, like what you've actually done. Whereas with banking, it's like a very structured role. And I would say that also works well as a veteran, like going from one very structured organization to another. It's like a nice transition. So I, because of all those reasons, recruited for investment banking. I did the consumer and retail group at JP Morgan. I was there for the internship in 2023 as a summer associate, and then came back as a full-time associate in 2024. And I was there for about a year. I just left the firm about, 2 months ago, beginning of July. I actually recently got married. My wife and I met at business school. She knew she was going to be in Atlanta working for McKinsey after I talked all that smack about consultants just now. So she was going to be, at McKinsey in Atlanta. I knew I'd be in New York. And so at some point, we're going to have to be in the same city. And I realized, kind of early on, investment banking, can be a great proving ground and a great way to like learn new skills. And if you want to grind it out to MD, I think there's, a lot of upside to doing that. But at the end of the day, like if you want to go out and do something for yourself, like the entrepreneurial path's also there. And so I'm actually working as a general contractor now. Julie's cousin is a real estate developer here. I've been very successful, had about a decade career on the development side. And so he's looking to get into construction. And so we have basically started out this general contracting firm together, using a lot of those connections, using his expertise and his background. So we're really excited about that. We're really just starting to scale, still at the beginning of that. But yeah, happy to answer any questions about the transition, about my path, about banking, why I left banking, what I did love about banking. But yeah, looking forward to it.
Yeah, thanks, Spencer. Like Spencer said, uh, the the there has never been a consult or a bank or excuse me, there has never been a consultant I've met who says they don't like working with bankers. I don't think I've met a banker who doesn't tell me that they resist at every turn consulting. So it's always a kind of a joke that I've made with Spencer and Julie, like that he really had to fall in love to have accepted a consultant, which he laughs at more than she does. But my current boss is an ex-banker. He was a VP at Goldman, and never misses a chance to make digs on consultants. So, side point, also notice there are no current bankers on this call, largely because getting current bankers to get any kind of public facing activity requires like an act like Jamie Dimon himself signing off on you being able to speak for the firm. On the flip side, Matt, Spencer, both being entrepreneurs, I literally said, "Would you hop on?" They said, "Absolutely, no problem." So, take that into account when you think about your long-term plan, kind of the autonomy that you have. That I asked a couple bankers, and they're like, "Let me talk to the, HR. Let me talk to our compliance." And I was like, "How long is that going to take?" And they're like, "Maybe in the spring we could do a webinar." And I was like, "Yeah, okay, that's great." Um, so Matt, I'll start with you for the first question, and Spencer just follow up after him. What does an investment banker actually do? And also, how is that different from a wealth advisor or a trader or private equity, other careers? Because so many vets think of an investment banker and they just think Wall Street. So what are you doing as an investment banker?
Okay, so the one, go look at who, for any job, go look at who pays and why. Bankers get paid 90% plus of the time when a business gets sold. 10% of the time they get paid when somebody buys a business. So what do? You get paid to sell companies. So there's all kinds of different activities you do to try and get mandates and then sell the companies. Bulge bracket banks, boutiques, and middle market firms all do it kind of differently. So like we both had bulge bracket experiences. So like your MD is trying to gain and maintain trusted advisor with Fortune 100 companies and be around the hoop for when they want to buy or sell something, and then cross sell, other capital markets things that aren't M&A. If you're at a William Blair kind of middle market shop, you're doing all sell side M&A. So you're working with private equity firms or founder owned businesses in order to sell them. That's the quick version.
Spencer, what would you add to that?
Yeah.
What's the function?
Yeah, no, I'd say Matt, that's spot on. I think I would just, sort of add on again, everything that you said was obviously right. But I would just add on like the way I think about it, especially at the bulge bracket level, is you are kind of like a conduit for companies accessing capital markets. So obviously M&A is like the bread and butter of what you do as an investment banker. That's kind of where the glory is. It's where a lot of the fees are too. But if you think about it, like there's debt, there's equity, and then there's M&A. So on the equity side, you have your IPOs. If you want to do like a big block trade of stock, you can do that. And you advise the company, help them access capital markets. You get a fee for that. On the debt side, say they need to do some sort of like capital restructuring where they're taking on like a new loan and sort of issuing bonds, that kind of thing. Then you help them market that and like syndicate that issuance. And so you earn a fee for that. And then on the M&A piece, as Matt already touched on, if you sell a company or if you assist a company in like buying another company, you get a fee for that. So that's kind of how you make money. And those are like the three buckets I would see is like debt, M&A, equity capital markets. And then I'd a little bit of and this is getting a little granular, but I think just like helpful to like hear these terms as you're thinking about recruiting. At the bulge bracket level where we worked, you have product groups and coverage groups. So product groups are along the lines of what I just talked about, where you have equity capital markets, M&A, debt capital markets. But then on the coverage side, it's like more sector specific. So you'll have, and that's where I worked. I was in the consumer and retail group. So I would do all of the different product groups, but then I would work with a team from those product groups basically. And so like if we were doing like we did a follow-on offering for Amer Sports, which is like they own Wilson, and so they were issuing new stock. And so like I was working with the client, but then we were also working with the equity capital markets team because they know better like how that process runs. So you sort of like form this ad hoc team with people from the product group and then people from coverage. And coverage really was more like manage the client relationship, kind of do like a lot of the touch points, the marketing, the outreach. And then once you're all together, like you're still doing the product stuff, but you just have people that are more versed in it and like can advise you like, hey, this is what I need from you. And like, this is, what you need to be doing kind of thing. So just to sort of touch a little bit on the day to day.
Great point, Spencer. I just add like in a bulge bracket environment, the coverage group senior banker's job is to gain and maintain trusted advisor status with the CEO, CFO, and board level relationships in order to understand across all of the different products that Spencer was talking about, what could the company need at any given time. And then you're like the scout to identify that thing, and you're doing the initial analysis on should we do which one of these four things should we do. Then they make a decision, and then you kick to the product group to help with the execution of the specifics of whichever one of those things it is. So like I did a public to public buy side, so we did a ton of initial analysis. Then they said, yeah, let's go try and buy that public company. Then you bring in the M&A group, you bring in equity capital markets, talking about like what's the stock worth, all that other stuff. So I think coverage group bulge bracket banking is a little more consulty-y than I actually thought it was before I went into it, but that's very specific to bulge bracket coverage. Whereas like if you're at a middle marketplace doing only sell side M&A, you are on a factory line of pitching and selling middle market companies. So I think there's actually a lot of nuanced differences between bulge bracket, middle market coverage versus product group. So we won't be able to go into too much detail now, but just know that there's actually deep down when you peel the onion back, there's actually your day to day is actually more different than you think it would be.
I laughed. Spencer and I were laughing about the perceptions. I think so many vets that I talk to think that investment banking is wealth management, which is where you're advising people on, hey, Matt, I'm going to manage your personal wealth. I'm going to tell you which stocks to invest in. And I was joking with Spencer that, it's kind of like being an economics major, which is what I was in undergrad, that people will ask, what stocks should I invest in? And you're like, I don't know. I just did a paper on like educational outcomes for elementary school kids based on school lunch choices or something. Um, so could you talk a little bit, Spencer, about the differences between investment banking and probably what it's not? Talking about trading, private equity. You mentioned fees. How do you get paid versus how does someone like a wealth manager or a trader uh, get their piece of the pie?
Yeah, I mean, I would say on the fee part, like one thing that's notable about investment banking is you generally do a lot of work for free and you only get paid if like a deal actually happens, which is kind of interesting to see. I mean, at the bulge bracket level, when you're an associate, it doesn't necessarily hit you immediately. And I guess really at any bulge bracket bank, like, there's a certain amount of your downside that's capped, even if you're an MD. But it's interesting that it's very much like a salesy role, especially as you get to the top, as a managing director, because like if you do a deal, then you get a cut of that basically, and if you don't, then like there's no money coming in. So like everything you do that's like marketing, client relationship development, like all that kind of stuff, it doesn't really move the needle. Like I think it's different from like a lawyer where you bill hours and like anytime you're doing something for the client, you're making money off of that. With banking, it's not like that at all. You really, unless you're actually doing a deal, you don't get paid. So that makes the fee structure very, simple. It's like a certain percentage of the deal, and usually there's like a certain cap. It's obviously you're not get 1% of like a $30 billion deal, just for the firm. But that's the basic fee structure. And so that's how we get paid. But then as far as how it's different from say like trading, wealth management, private equity, I'd say like for sales and trading, that is truly like buying and selling stocks, sort of, and mostly on behalf of the firm. And a lot of times like sales and trading, like if you are marketing a deal, they will help, facilitate buying and selling of that like underlying stock base, like an IPO. You'll have people that like basically will say we're going to buy shares of the company like at the IPO price, and then sales will facilitate those trades, and they'll also facilitate like the aftermarket trading after that. So it's like, and there's actually like big wall in. And like sales and trading kind of encompasses broker research as well, where you're like doing research on companies and releasing reports and saying like this is a buy or you should sell this kind of thing. And so that on that side of the bank, that's like public side, and where private side and investment banks. So like we don't really talk to those people at all. There's like a big communication gap, because they obviously don't want investment banks selling the idea that like we can manipulate markets for you, to clients. And so it's very interesting that sales and trading is really separate from what you do in investment banking, not just because it's a different function, but because of like compliance concerns and regulatory concerns. But yeah, just touch quickly on wealth management. That's more like what Wyatt said, is where you have like a high net worth client where they come to you and they say, we want to, have you manage our money. And, it's an interesting career path. It's definitely, I think, like a lot of sales and building a book of business early on, and then you really reap the benefits of that later on. But it's definitely like an entirely different model from what you do in investment banking, because you're just working with individuals, and you're not really even working in a team to the same degree as investment banking, and like you're not working on deals, and it's you're not doing something that's in the Wall Street Journal the next day. It's really just all just managing someone else's assets. And then I'd say private equity. I'll just touch on it briefly because that's a big feeder, investment banking to private equity. Basically, like, as a banker, you work with a lot of PE firms because they'll be selling assets like to other PE firms, to strategic buyers, which are like other companies, or they'll be looking to, do a roll up because say they have like a pet food manufacturer, and then you have like a pet food brand that wants to sell, and it's like, okay, we can do a roll up because then we can have like the manufacturer like rolled up with the brand or something like that, and there's synergies there. So there's like all these different things you can look at, but that's private equity would be on the side of like we're buying the company or selling the company or operating the company in order to sell it. And I won't go too deep in the weeds on private equity and the mechanics of that, but there's someone who works with an investment banker and who holds like assets, not as a banker, we're just like a broker of deals basically.
Yeah, just dumb infantryman version. investment bankers are real estate agents selling houses. Private equity are people who are buying houses, making them better, and then hiring real estate agents to sell it at a higher price.
I love that you say that private equity is in fact making it better, Matt. That's a company man line. Um, Me working in private equity, I would, of course, always agree. Nothing bad ever happens post acquisition. Um, Question. Also, I will add, um, my company right now, to kind of just tie this point off. I'm helping raise debt, right? So we're looking to get a few acquisitions underway. We need more money. We don't want to raise equity because that dilutes everyone, makes it so that my shares of the company are worth less. So we want to get debt. So we've gone to a very different investment bank. They specialize in utilities and security systems. And basically, they take our finances, they slice them up in a very special way to make us look as attractive as possible. And then they find us capital. They literally find us money. And they convince people that, hey, this person is that you can give them debt at a 3 or 4 or 5 times, whatever the metric is, right? EBITDA or steady state net operating cash flow. And that's what the banks do for us, right? They tell us like, you're not looking at this the right way. Let's splice this up enough. And someone like Spencer Matt would have been on the other side of that, basically, like they said, being the real estate agent. Um, Spencer, could you walk us through? I think the thing that people talk about a lot with banking is it is a grind. There is no disguising that. But what are you doing day to day? So could you kind of walk through like the average day at JP Morgan? I mean, wake up. If you were able to work out, when you eat, what are you doing at the office when you're there until 1 a.m.?
Yeah, no, it's a good question. So yeah, I'd say like typical day, investment banking tends to start a little bit later than most roles. Like, and I think like the base expectation is kind of in before 9:30. Some of your junior analysts might stretch that a little bit if they've been there for a while. I wouldn't recommend that as an associate, but I would say like mostly it's interesting because a lot of your comments from seniors will come in the night before. You'll have worked through them, so you'll stay up late, and you'll probably come in a little bit later as a result because there's probably not a lot going on in the morning. Your seniors have just like woken up, got the morning coffee, like read through everything you sent them, and so probably by like mid morning, 10 a.m., 11 a.m., like you'll start getting comments again. And just to kind of like ground you in like what I'm talking about in terms of what you've gotten comments on, it really depends. I'd say like I'll just for sake of example, let's say we're going to go meet with like the Starbucks CFO in 2 weeks, and we're going to pitch them a couple of different options, of how they can change their capital structure to be more efficient, like take on a little bit more debt, or and maybe that's like if they take on more debt, they can do some M&A, and there's a couple of emerging brands that are high growth that they could roll up. Like I don't know that Starbucks would actually do this. I'm kind of just like spitballing on like here are like some of the ideas that you kind of come up with to put in front of a CFO. A lot of which like they might not necessarily do, but it just shows your thinking and you're like trying to solve their problems. And so when they do have something they want to do, you'll be the first one that they'll come to. But basically you'll be putting together this pitch deck of like, here's where you are, here's how people look at you, here's what we think some options are for you to optimize performance on the financial side. And so like you'll put together this big deck, and you'll have like broker research, you'll have like industry reports, and maybe some like Nielsen data of like here are sales for private competitors, or maybe you'll just have like straight up operational benchmark comparisons to other public companies. So you'll have like a whole slew of data there that's been analyzed, and you'll sort of have some pretty key conclusions throughout the deck. But as you're putting this deck together, there's like a lot you need to do. You'll have Excel backups, you'll have the PowerPoint itself, you'll have to work with the visuals team. Again, this is all at a bulge bracket, by the way. I feel like it's a little bit more slim of a team usually when you're at a boutique and you're doing a lot more stuff yourself. But like there's like a research team at JP Morgan, there's a visuals team at JP Morgan, there's like all these people you can send things off to as you're like working on the bones of the deck. And so that's kind of what you do on a day-to-day basis is you put all this stuff together. And then you'll send it to the, a lot of times like the VP first, then your executive director, then your managing director will take a look at it. Sometimes they'll like shred it and be like, even the VP told you to do something, the MD is like, nah, I don't like that. And so it's a very highly iterative process, which is good and bad. I would say that's like my one knock on investment banking is like, there are some inefficiencies where like there could probably be one or two fewer layers of bureaucracy and things to get done a little bit faster. But yeah, it's very highly iterative. And then, not to take too long here on the response, but like I would say that's like in a marketing situation, there's a host of other things that you could be doing, but I'd say like the flow is pretty similar. You just maybe add some more stakeholders. Like if you're working on a confidential information memorandum that you're going to send out to potential buyers, like you send them a teaser, like this company wants to sell, you're representing this company, and then other buyers are out there, and you send them a teaser, and like 10 companies say like we actually want to take a serious look and sign a non-disclosure agreement. And so you'll have this 70-page document that you'll send out to buyers. And so it's the same thing as like a marketing deck. It's just on steroids because everything needs to be like exactly right, like super detailed. And you'll be working with the client directly to make sure everything's right. And so it's just the same thing, only instead of answering your MD, you're answering your MD like plus the client, and working with a lot more stakeholders. And so that's really what it is you're developing materials for people to look at, all with the intent of getting business and then eventually selling a company. I'm trying to think of other things. The other things you could be doing is facilitate at the junior levels, like facilitating investor calls. A lot of times that'll happen if you are on like a debt deal or an equity deal. They'll be like if you're marketing a securities offering of stock, you'll sometimes bring investors in what's called a wall cross. It's like a public company, but some investors will take like a look on the private side, and see like, oh, like, do you want to invest or not? And so then there's like a lockup associated. Again, not trying to make this too complicated. And I'm just trying to give you a realistic picture of like, here's all the different things you could do. It's like, you could just be marketing to a, CFO, or you could be doing like real client work or talking to investors. Again, your MD is probably doing the talking for the most part. They might throw something to you in a meeting if they don't know the details, but a lot of what you do as a junior is more like making sure the presentation is right, the data is right, your MD is prepared, the client's prepared to answer questions.
The please fix.
Yes.
Matt,
THX.
yeah. So Matt, what would you add to that on
So
life at Baird?
okay, so like become friends with the admin. So like why you were talking about working out. So I knew that my VP and MDs that I was working with, I was best friends with their secretaries or administrative assistants. I knew when they were on airplanes. The gym was across the street. So like I would plan my workouts around when are they actually on an airplane, because I know that they can't call me while they're on the airplane. Right. So like your battle rhythm is weird, but like you can figure out ways to like, that's just a quick example of like, how did I actually work out? Right. You certainly have less control over your life. My internship, I was in the office every single day for 10 weeks, including the 4th of July. But my oldest was in kindergarten when I was an associate, and Saturdays were protected. So they had to so I coached her soccer team because in order to work a Saturday, they had to send an email on Friday, which happens sometimes, but you knew ahead of time. So I think the last part is the longer I did it, the more I understood all those iterations of the decks. Think about that as like the military planning process. You're actually prepping your MD for the meeting. So all their iterations of the deck are basically like you teaching them and helping them figure out what do they want to say and sound knowledgeable. So they can go into the meeting and then they plop down this 80-page deck and they probably talk about somewhere between 0 and 10 pages of it, but they're prepared to talk about anything, and you help them get ready for it.
How much travel is there? That's one thing. Consulting, we had the consulting webinar, and obviously consultants are gone Monday to Friday. Do you
Great.
do you travel as a banker? Matt, start with you. Go
Yes. So I think So again, this is something where firm, geography, group will all have an impact on, are you going to travel after being an MBA? So I traveled much more as a Chicago associate than I would have as a New York associate, because I was working like directly for the MD as a senior associate, and he would take me to the meetings. Um, so like your first 6 months, you're probably never traveling. And then in banking, kind of like your travel goes up as you get more senior. Whereas like in consulting, you go from, my understanding, you're going to the same place for 4 days, to as a senior consultant, you're just going to 3 different places over 4 days. Um, so first 6 months, you're pretty much always going to sleep in your own bed, even if that's for 2 hours. And then like after that, you do a day trip or one night, maybe 2 nights, as an associate. And then that ramps up more as you become a senior associate and a VP.
Yeah, I mean, I agree 100%. I was in New York. I didn't really travel much as an associate, and that's pretty typical, especially as like a first year. I'd say like the one thing is if you work on like a more complicated like M&A process, like sometimes you'll just go down to the client site to like get information or just be there on hand as there's like buyer meetings, like management presentation to a buyer. And so like there was one woman who worked with me who was like the first 2 weeks she was traveling for like a couple weeks in a row, and so which is unusual, but that does happen. So I'd say like at any time you can travel, but yeah, it's very clear like that, like the higher up you go, the less time you're spending in the office, prepping the MD to do something, and the more time you're spending like actually meeting with clients. Especially because like the role of an investment banker changes so much from the time you're an analyst, like all the way at the bottom to an MD. Like as an analyst, you're really just, a lot in Excel, a lot of analysis. Like it's a very technical role. And by the time you're an MD, like it is technical in the sense that like they know everything and that, you're presenting to them as an analyst, and like but like at the end of the day, you're a salesperson. Like you're trying to bring business in, you're trying to win business for the firm, and then also like sell a company. And so all the technical stuff is just a backdrop for you doing your job. And so like that's why you're on the road so much. I think that's why there's this interesting pivot point around like VP to ED, where like I think VP can be a tough balancing act for a lot of people, like the role after associate, because you have to kind of do both. Like you have to be focused on like the presentation and like the technical aspect, but you also have to be like developing your own book of business and your own clients, and you can't just be like totally reliant on whatever your MD brings to you. So just something to kind of think about in terms of the travel piece, and thinking about the role and how it changes as you get more experienced, more senior.
Yeah. Last question about kind of the day-to-day perks. One thing that people ask me, consultants obviously get their Marriott points or Hilton or wherever you are flying, you're staying. They get their, my friends that are at, consultancies are hitting Delta Diamond and United 1K or whatever. Um, what is it like? I mean, do you get food in the office on a scale of like 0 to Google? Are you getting perks like, DoorDash into the office? Um, how is it being a banker? Spencer, maybe you start and then go over to Matt.
Yeah, I mean, I'd say like the perks compared to even like a consulting firm, especially at JP, were not as good. I think it does depend on the bank a little bit. And I think I was at JP Morgan at a weird time. Jamie Dimon wanted to put $0 into the building because they were building a brand new one next door. So I'm sure that the brand new building will probably have a lot more in the way of like little snacks or like, better selection of coffee and that kind of thing. So I guess what I'm saying is like if you're at Goldman, like I've heard their building is beautiful. They have like a great gym, it's free. And so like take what I say with like a bit of a grain of salt because it's a little bit unique. But I would say JP Morgan, like not a ton of perks. They had coffee in the office and you would have a dinner allowance of $35. And that was pretty much it. I do think with banking, the difference is that like your pay scales like so much faster than it would as a consultant. Like it is thinking about like what a senior VP makes like versus what like a MBA associate, like fresh out of the MBA program makes. It's like pretty wild the difference, which is not necessarily the case on the consulting side. Um, So I think that's like the reason probably that there are fewer perks is you're, compensated kind of commensurately. I think obviously as you become an MD, you start to get those, points on the Marriott card or, your Sky Miles or whatever because you travel a lot more. But at the junior level, I would say consulting is way better in terms of the perks, both in office and traveling.
Yeah, you don't have time to do much. I would just say like don't, I guess old man here comment, but like don't get shiny object on what the perks are. Like understand which one of the no one's going to give you anything more than the market clearing price they have to give people like you in order to get enough of you to come and enough of you to stay. So like unless one of those perks is like wildly more valuable to you than the general market, you're not getting any alpha out of the perk. So just think about like how much am I going to like it, what am I going to learn, and how does it align to my medium long term goals, not like, oh, there's a better coffee or something like that. Like when you're working 80 hours a week in a white collar job, like that stuff is not cool. You don't care very much at all. Like when you're exhausted sleeping in your bed, honestly, like great, I'm at a 5-star hotel and I can like buy a $40 hot dog and room service and not pay for it. But like what's really the difference in how I feel compared to being at like a Courtyard Marriott and like getting the scrambled eggs and bacon? Like nothing, because I'm tired working and trying to work out, and that's it. So, you know, like, and then as an MD, like, my one of my MDs, you know, the South Africa team said, we need you to come to South Africa. He left the office at 3 p.m. They purchased a $25,000 first class ticket that left 5 hours later. He like went home, packed, went to the office. Then we worked all night in order to turn the deck. He landed in London, and we knew when he landed in London, that's when we had to have the draft. He sent comments when he landed in London before he got on his connection flight to South Africa. We sent another version for when he landed in South Africa. Then he sent one more version. We turned it one more time. He did the meeting, and 3 hours later, he got back on the plane and flew back home first class. So, like, yeah, he flew first class. He's got, executive platinum on American. Like, that sounds pretty cool. Like, I guarantee you, when that guy got home from that day, he wasn't like, I love traveling. Like, going to South America was awesome. Like, so anyway.
Yeah.
I'd say one quick note on that. I agree with everything Matt said. There is like it's interesting. I feel like with consulting firms, I just like thinking about like first class and like the nice, method of travel. Like I will say like I think bankers like have it a little bit easier in terms of like the rules around like what kind of hotels you can get. Like I only traveled twice, both for recruiting things, and I stayed at like the Ritz and I stayed at the Four Seasons. Whereas I feel like consultants, they've really started to like crack down on like how nice the hotels are and like how long the flights have to be for first class and stuff like that. So I feel like banking, like when you do travel, like they tend to be a little bit more, at least at JP Morgan, a little bit more liberal about like where you can stay and what you can expense. So I guess there's a silver lining there, but
Yeah. I know, completely agree. And travel, it's cool the first couple times you do it, especially after coming from the military, where travel is objectively just shitty. Like, you're on the Atlas Air flight getting an airborne sandwich, which is like the, shitty white roll with the American cheese and ham. You have to like buy the Gatorade that they bring around, and you're like, wow, I actually get um, real accommodations. So, keeping that in mind, but it wears off. Like, I traveled to Lithuania, it was pretty cool, but it was also like you're in a factory most of the day doing stuff that's not that fun, and you like get to go around Lithuania for, you know, maybe 4 hours. So completely agree. Jumping now to people, obviously, if someone's in the call, they're probably hoping to recruit into an investment bank like both of you did. What skills do you need to prioritize? If someone now is looking at investment banking, recruiting, I'd kind of say there's probably two areas, the behavioral and the technical, right? You have your coffee chats, which are non-evaluative, and you have your technical assessments. what do people need to get good on to successfully recruit into an investment banking job? Spencer, start with you.
Yeah, it's a great question. And I would say like for me, especially at this point, I would focus on the technicals. I would focus on like understanding what the job actually is. Like obviously we kind of give a brief summation, but like there's plenty of resources to, online. You can go to Wall Street Prep, Train the Street, you can just Investopedia, whatever. But just start like understanding like really what an investment banker does, the difference between bulge bracket and boutique and product and coverage groups. And sort of so when you start the recruiting process formally, you know what you're talking about when you're speaking to MDs and you're making a good impression early on. And you know what questions to ask them. I'd say the other thing is technical prep. Like I kind of started that late personally, and like it all worked out obviously, but it was kind of stressful. Like at the prepping while I'm doing coffee chats, because like a big part of recruiting is just talking with bankers, and like they'll throw technical questions at you, not to the level at you get in a formal interview, but that will happen. And so like having to like play catch up a little bit, like I'm doing the coffee chat thing, but I'm also studying the technicals. Like it's a lot to do all at once. And so the earlier you can start the technical prep, the better. If you go on Wall Street Prep or whatever, your business school gives you access to, um, you'll have access to the 400 question guide, which is like the Bible for investment banking interviews. I wouldn't like go through it question by question and try to memorize, because it's not very efficient. Like what I would do is like, so maybe read the summaries of each section. And then there's like courses on Wall Street Prep of like, here's what an M&A model looks like. Here's what, the 3 financial statement model, like done together in one Excel looks like. And like, you can start to like build a model, play with it, understand how the financial statements interact with each other, then like supplement that with going back to the 400 question guide and saying like, here are some of the questions I need to know. Like, here are the 4 areas, that I need to really focus on. And once you get that sense of like technical prep, I think, and like start practicing the questions, I think that'll really help just make you feel more confident when you go into formal recruiting. As far as that behavioral piece, like honestly, I felt like that, like if you can do a good job in the MBA interviews, like you can do a pretty good job in banking. I think with consulting, like they really place a high emphasis on the what they call like the personal experience interview, or what have you. And so I think it's a little bit different. They're looking for something very specific. I think with banking it's more like, it's when you say like I'm a vet, I have leadership experience, management experience, like here's how I can like take a tangible thing that I've done and like show how I learned a lesson from it. Like you're just basic interview skills, like I think you'll be fine. For me personally, I think the technicals really make people shine. And I'd say last thing, like the one caveat to that behavioral point, like really have a good reason for why you want to work at that bank specifically. I think that's that's a huge killer. You see people, if they can't clearly articulate like, hey, I love JP Morgan for these 3 reasons. And it's not just like, it's the best bank. It's like, no, it's like, I met this person, we had this chat, and like, that really struck me for this reason. And like, it's important to have a really well thought out story for like why this firm.
Great. Yeah. Okay. So first, just think about backwards planning and understanding commander's intent 2 levels up, right? So from a backwards planning perspective, when you're talking to a VP cares about like, will this associate make my life easy? When you're talking to an MD is thinking about like, sure, I want to make sure they can do the associate job, but you know what? At the end of the day, like I'm going to rail the VP if the shit's not right. So they're thinking a little bit more about like, can I project them to go in front of clients and like eventually be a revenue producer, right? And then even that window that I just gave you is a little bit different if you're interviewing for a coverage group in New York versus a regional office in Chicago that's executing out of Chicago, or a boutique or a middle market bank, right? So like really thinking about like target identification for who is the specific person I'm talking to, and like from their lens, what do they care about hearing from me, right? Like the VP doesn't want to hear managing associate, like I'm going to be great, but like managing client relationships and blah, blah, blah. They want to know like you're going to grind and do whatever they tell you to do with a smile on your face and outwork everyone else. right? And then like the MD wants to hear a little bit more about like the strategic stuff and maybe develop business and relationships eventually. If you want to be in a regional office, like really understanding like why you want to be in that region versus are you just using this as your backup plan, right? Um, so I think those things are really important. And just like big picture, consulting firms do a case interview, which is over 50% of the total evaluation process. They don't care if you are at a nonprofit, military, or spent 5 years doing consulting before the case interview. It is a pure meritocracy. Everyone gets scored the exact same way. Bankers are used to projecting value into the future. So in their minds, there's a little bit more of like, what have you done before? What's your pace of learning and rate of change? And where can I project you in 6 months when you hit the desk for your summer associate, and then 12 months after that when you hit the desk full time? So honestly, like that was one of the reasons that I thought banking was better than consulting, was because like they actually could think about like, well, sure, like you didn't know the difference between an income statement and a balance sheet 2 months after you got back from the border of Pakistan in Kunar, but like you're smart and you'll figure it out, right? And like, hey, here's where I'm at in September. Here's where I am in December. Um, and then lastly, I think like the grind of the coffee chats in banking is way more intense than the social aspect of consulting, which is ultimately screening for grit. Because like grit and just being able to take a you know what sandwich with a smile and a good attitude is a bigger part of being a good banker than being a good consultant. So they're just trying to put you through a process to see how much of that can you actually put up with. And then to Spencer's point, the more of those you do, the more you learn the nuanced differences between coverage product, between bulge bracket, middle market, between this bulge bracket bank and that bulge bracket bank. And like one of the best tips I got, definitely pass on. Ask the bankers what they think about the other banks, because now you start to develop a view of what everybody on the street thinks about all the other places, which makes you now you can ask a 102 or a 103 level question instead of like the 101 level question that you can ask online. Um, so I think, yeah, anyway, like it, for anyone who's married, just I got expectations right ahead of deployments with my wife. And then I thought business school was going to be easy. Like the first semester of business school recruiting for investment banking is 18 hours a day, 6 days a week, if you're doing it correctly. So if you're married, set good expectations with your spouse that like it's going to be as busy as you were in the military or more busy, depending on what you did for your last 6 months in the military. And like the way you get alpha is just by outworking people. And like if that doesn't sound like a good idea or something you want to do, then there's lots of other MBA jobs you can recruit for that won't require you to do that. But like that's how you can get ahead, is you just outwork all these other people who aren't used to working as hard as you are.
Yeah, 100%. The value that most vets bring is just ability to grind, but don't underestimate your civilian classmates. There's some kids that just like their horsepower is higher and they will just push. Like they just really grind. Vets do not have a monopoly on hard work. We have a monopoly, I think, on or at least we are higher than average, I think, on kind of the grit that Matt talked about and just the ability to kind of um, you know, get through shitty things. But man, hard work is not a thing that vets have a monopoly on. Last question that many people think about: you can become an MD, like you all talked about. That takes a while. You can make incredible money. Um, but neither of you is a banker. What does it look like to exit, and what sorts of things can people think of? And specifically, I want to talk about the thought that so many people go into having or go into an associate role thinking is they'll exit into private equity investing. So could you touch on general roles and then specifically discuss the likelihood that you can land a private equity investing role, which different for the
Yep.
audience, different than an operating role like what I have, where I'm not making nearly as much money as the carry that investors make. So Matt.
Yeah. Okay. So first of all, just like you guys trying to have some idea of what you think you want to do or don't want to do in order to pick banking, consulting, or something else, super, super important. So thanks for bringing that up, Wyatt. I think like, sure, I would just say like, if you want to be a Fortune 500 CEO, go consulting. If you think you might want to be an entrepreneur, do investment banking. Investment bank, like businesses only fail because they run out of money. And to Wyatt's point at the top, you learn a tangible hard skill by doing investment banking. And I think one thing from the military, like in business school, people are going to say more exit opportunities from consulting than investment banking. If you do investment banking, you're pigeonholed into finance. That is true for Gen Pop at your MBA. But if you think about like if you led people and understand people and teams, and then you have a hardcore analytical skill and you understand how finance works, can pretty much do anything in business with those skill sets combined to go do something else. So that's the general answer. Specific to private equity, look, I would tell you it is extremely hard to get a private equity investing team job as a military person getting an MBA. Doesn't mean it's impossible, but it's really, really hard because you're competing against people who already did it for 5 or 6 years. And the investing team job doesn't really require like leadership people skills very much. It just requires like all the financial analysis. So, if you want to go into private equity on the investing team side, straight from investment banking, you definitely want to go more product group than coverage. Um, or you can go pure sell side M&A and try and go to like a lower middle market shop where like they might actually want you to know something about people and deal with management teams and stuff like that, in addition to being able to do the financial analysis as a senior associate or a VP.
Yeah.
Spencer?
Yeah, and before Spencer answers, I'll just give some definitional clarification that I remember thinking. Private equity, generally you have three tiers. There's mega fund, which is your KKRs, your Apollos, your Carlyles. They are dealing with multi-billion dollar deals. You'll hear about Apollo acquiring, who they acquire, like Walgreens or something, right? Coming to investment banks probably to do that. But you'll find these private equity firms acquiring gigantic companies with leverage. Mid market is kind of your like 100 million to maybe 250 up to like a billion. And then you have lower middle market, like Matt talked about, which is like buying very small companies and generally scaling them up to sell to either mid market or a strategic or mega fund. Um, and like Matt said, I work at a lower middle market company. It's quite a bit smaller than, it's pretty small. And like our goal is to grow 5 to 10 times. Mega funds are not buying companies to grow them 5 to 10 times. They're growing companies to do some really intense financial engineering. You have to be so, so smart to know how to do that engineering. To Matt's point, very difficult for vets to jump in. At Wharton, we had like 50 guys say they wanted to do private equity. One dude got an offer, and it was to a specific vets group, and he's exiting after a year, actually, of private equity. So very, very hard. Even if you do get into HBS, GSB, Wharton, Booth, Kellogg, Spencer, to you, you can probably confirm that same point.
Yeah, 100% on that. Like I wanted to originally recruit into like, oh, as I said, consulting, but then as I was thinking about banking, I was like, well, why don't I just try to go straight to private equity? And I talked to people in PE and they were like, yeah, that's probably not going to happen. And so very quickly you realize like, yeah, I have to. And honestly, it's kind of, I think it's fair in the sense of like most people who get into PE, unless they recruited like straight out of undergrad, which is a small subset, did banking first, and cut their teeth in banking. So you're kind of just doing what everyone else did to break into PE if that's really your long-term goal. And I would say like, yeah, I think coming out of an investment banking associate role, like even 2 to 3 years in, like it's probably pretty hard to recruit into mega fund PE. That's it's I'm like with anything, I'm sure you can find a story of someone who had the tenacity or the connections to do it. So like, I think like in my own experience transitioning out of JP Morgan, I learned like there is a lot of opportunity out there and like you never know what's out there until you look. So like I tend to think in less in terms of like it won't happen, but more like what's the likelihood. And I think the likelihood of like you working at JP Morgan for 2 years as a MBA associate on the older side and then trying to recruit directly into like a mega fund PE shop is just it's low. I do think that like where you go in terms of geography and like if you're talking middle market, like that changes the ball game entirely. Like coming down to the Atlanta market out of JP Morgan, like I didn't recruit specifically for PE, but I did look at like a restructuring consulting firm, more like bankruptcy stuff. And then I also looked at like just a regular boutique middle market bank here. I got offers from both of those places. And honestly, I mean, I did like interview and went through a rigorous process, but like it wasn't, I feel like there was a lot of demand for someone coming out of New York from like a bulge bracket bank. And so I would say like in terms of like what your options are after banking, like you definitely have a lot out there. And I think that increases exponentially if you're, not staying in New York and if you're going to like a Chicago or an Atlanta or, someplace where the finance ecosystem is like a little bit less robust, say. And where like there's just not the market's not flooded with a bunch of people that are fresh out of an MBA program. But yeah, I'm trying to think of I kind of lost my train of thought here. Yeah.
What about like FP&A, corp dev?
Yeah. That's getting a corporate job, like so like you could get a corp dev job at a middle market company or even one of your clients or something like that, doing
What do
M&A and eventually become a CFO.
you're basically buying companies for you're basically acting as an internal kind of acquirer.
Correct. Yeah. And like I got a couple recruiter calls to like, go kind of be like a P&L owner, buy-in builder, right? Even a million years ago when I was doing that. So again, that lower middle market, like hybrid skill set of like, I understand people, I understand numbers. So like I can go help you buy companies, but also kind of run them. Like there's definitely be opportunities there as you go like lower middle market. But to Spencer's point, like if you tell me today, like I want to be a mega cap investing team professional, I would tell you go get an investment banking analyst job. Don't go get your MBA. And um, and then you go analyst to private equity associate and work your way up that way. There was one guy at Bank of America Merrill Lynch who was a veteran that went straight in as an analyst because he wanted to go into PE, and it's almost that's anyway, that's the only way. If you said like that's the tried and true way to get that mega cap job, but there's a ton of jobs out there. So how much do you want that mega cap job because you think it's a shiny object versus it's actually the right thing for you would be my next question.
You
Yeah,
talk
and on that note, like I would say too, like I this is where I was going before I lost train of thought. I chatted with a mentor who was an HBS MBA and then had worked his way up to MD in the M&A group at JP Morgan, and he mentioned like if you get senior enough, you can probably make that jump. Like you'll get an offer from a hedge fund or from like a mega cap PE firm, but that's like when you're really senior and you probably worked with those clients like multiple times and they know you really well. And so like if you really want to do the PE thing straight away, it's like analyst to PE, that's like a tried and true route. Or the other thing is you just like get senior enough and get exposure to enough people where like you can demonstrate real value. But again, that's probably like a 10-15 year time horizon in investment banking.
Just sorry, one last thing. When you guys have your .edu in your MBA, it is the ultimate license for networking. And so like I know this is not like a how to get the most out of your MBA, but I can't help myself. Like you have to burn it on both ends. Like you need to take the hard classes so you can make friends with the smart people. You need to go out late at night with the trust fund kids so you can get to know them and their networks. and you need to use your .edu in order to learn and build relationships with as many people as possible. Be like, if you went to a service academy, just to remember like the responsiveness of a colonel to you when you were at a service academy versus when you were a peon lieutenant in the military. It's kind of the same thing with your .edu versus like then it's just like you're some wet behind the ears person that's trying to learn. Once you're out in the real world, it's like, what are you trying to sell me? I don't have time for you. So to like the number one thing to make the opportunities for post your first job is the network that you're building while you're in your MBA, instead of like sitting around fat and happy that you got your full-time offer during your second year.
Yeah. Well, final thoughts, Matt. We'll start with you so you can log off and go back into back to school, and then we'll go jump to Spencer.
But I don't know why. What have we not covered? Or give me something here. I don't want to.
Give
Yeah.
people why should they and why should they not? What questions should someone ask if they're thinking, should I go and become an investment banker?
Okay. All right. So do tact. You know, tactically, if being gone 4 days a week, think. Okay. So think about lifestyle stuff first. Consulting versus general management job versus banking. 3 different lifestyles there. Fine. But think about like if you're highly confident that you think you might want to do something entrepreneurial, I would just pound the table hard on investment banking as the best thing to go do if you're military. Because like I said, you're going to get a hard skill. The hard skill plus the soft skill that you have from the military, I think provides you the most optionality if you want to do small business stuff, entrepreneur, anything like that, because you don't need anybody else's help. Um, if you if you're more consulting is more academic than investment banking, I think, all right, what's a good thing you can actually remember instead of me just rambling? Investment bankers get paid when there's a transaction. Consultants and lawyers get paid to do work. So just think culturally about like the people who have succeeded and stayed in something for 10 or 15 years, where they only get paid when they close versus they get paid to do work. And like that just drives. I'm not making this is not like a one's good or one's bad. They're just different. Right. So like the analogy I'll leave you with is military, I'm Army. Think about the mission of the different branches and how the mission of a branch drives the culture of the branch. So think about, and when you're thinking about what job to do, whether it's should I do banking or consulting or which kind of bank should I go to, I would just challenge you, learn about how do they make money relative to other industries or even their peers or other people, like bulge bracket versus middle market. Once you understand how they make money, you can understand how their culture will be reinforced to be different. And then think about like, is that better for me or not? Okay, so that's the high-minded academic shit. I showed up and 80% of my veteran peers at Kellogg were recruiting consulting, and the signaling of doing banking was basically just as good as consulting. And so I was like, I'm a bigger fish in a smaller pond, and the recruiting process is more about can I outwork people than how well can I do on a case. So I also like don't want you guys feeling overwhelmed. Like that was my relatively simple analysis, like on the veterans, like, little retreat that we did at the beginning with KVA. It was like, I thought about that for 10 minutes. Like, yep, I'm just going to charge hard in investment banking. Last thing I'll say, if you, as a military person, if you do investment banking, you get an offer, you get a return offer from a bank, and you decide you want to do consulting. I think it's much easier to recruit consulting second year, having not recruited the first year, because the delta between you and everyone else to understand business to win in the case interview is so much lower. And you can just play to the negative stereotypes of bankers with all the consultants and be like, they're a bunch of transaction oriented thugs that don't really care about what's in the best long-term interest of the clients. And I want to do consulting, they'll be like, yeah. But you've proven that you can do something quantitative and work really hard, and you'll be better off with the case. So I think pure game theory, unless you're 100% sure what you know you want to do, banking offer at the end of your first summer, even if you don't take it, has way more optionality trade value for re-recruiting second year than doing anything else.
Yeah, thanks, Matt, for stopping by. And for those watching, we do have
Hey, thanks, guys. Sorry for the lights.
we have some cool stuff coming up actually with Matt and Chamberlain. So stay tuned if you're well, folks on here, if you're active duty and you're thinking about an MBA, stay tuned. But thanks, Matt. I'll kick
Yep.
it over to you now, Spencer, for final thoughts on that question.
Yeah, no, I mean, I agree with everything Matt said. I, don't have necessarily too much to add. I would just say, like, for me, and on that point about like strategy of like, re-recruiting second year for things, like if you want to do investment banking, like you have to do an investment banking internship, basically. There are some rare exceptions, but I would just say like probably you're going to close that door entirely if you don't do the investment banking summer internship. Not the case with even consulting. So like, if you have even an interest in banking, like game theory makes sense to probably do the banking internship. At the very least, you learn a lot, and it's rigorous experience over the summer. Which consulting internships, I just know from talking with other people, like you probably will not learn as much. I'm not talking about the consulting job. I'm just really focused on the internship. But I would say like broader in terms of like why choose banking over other career paths. I think about it like what really interests you. Like for me, like anything finance and business school is just always more interesting to me. And I love strategy courses, but I always loved like how they intersected with, finance. It's like the big strategic questions of like, hey, like you have an expected sort of cost of capital, and like, are you just meeting your cost of capital versus like, how are you exceeding it for the industry? It's like if your, WACC is 7%, but your, ROIC is like 12%. That's like the strategic question. Return on invested capital is 12%. It means like you're making more than you expect to from the capital you invest. Is the basic equation I'm getting at. But that's like the strategic thing. And then like that's the question of like how are you driving that? And then on the financial side, it's like how does that flow through the statements? Like how do you position a company that way to potential investors or to someone who wants to buy it? And so for me, I was always more interested on the financial side of like this is how we're positioning this company, and like this is how we can show like from an industry perspective, like it's in a great industry, and then like it has this unique attribute that other competitors don't have, and that's why you can see like bottom line is increasing, beating the street estimates, whatever. Like it's basically like how you position and sell a company was always really interesting to me. You need to understand the strategy side of like how you generate like that high ROIC compared to your cost of capital, but like that's more on the consulting side. It's like if you want to really think about the operations and like getting into the weeds on like how a company does business and like how they can position an organization to perform better, that's more consulting. And so like that's a much more academic answer than Matt's, and like it's a little bit less long-term career focus. But I think he really hit on those points, and I just want to kind of say like also just think about from a pure academic perspective, like what's the most interesting to you.
Yeah, thanks, Spencer. Thanks to everyone for coming. We'll have this up. If you missed any of it, or if you want to just download it off YouTube and take the notes. Uh, Spencer's DMs are always open if you need a contractor in the greater Atlanta area or the Southeast. Make sure to hit him up. So yeah, everyone, thanks again, and we'll see you for the next one.
Thanks, Wyatt.